Welcome to Charts Today. My name's David Linton, and today's edition for Thursday, the 28th of April, comes to you from London. And we start by looking at the dollar index. It's pushing higher, making new 6-year highs, and we are just a smidgen away from making 20-year highs. So that dollar strength, something we talk about all the time, is back, and that means that the euro is looking weaker. Did just touch below 105 this morning, so sinking lower all the time. A really bad week for the euro. Downside targets, we've talked about this for a very long time, and so it just does show that these targets are coming home to roost. And of course, if we make new lows, then we start to look at some very big downside targets, so keep an eye on those on your charts. The dollar yen, we're sitting at 130, broken that level for the first time in years as well, pushing all the way to this 161 target, so I'm 23% higher. Dollar strength really the feature, and sterling sitting at 125. Once we fell through that 130 level, we really just plummeted away, so that's really quite key as well. Against the euro, sterling is sitting at 119, just falling away a little bit. Has had a weaker week, if you like, but there's still the trend is just slightly up, so sterling has the upper hand, but sits somewhere between the euro and the dollar. Bitcoin sitting at 39,700, so key there that we are just still below that 40,000 level, but just playing with this cloud support, so that's quite key. And looking at the S&P 500, we were up slightly overnight, and the Nasdaq actually just ended up falling back slightly, so couldn't hold on to the gains. But the news out overnight was that Facebook had better results than expected, and that has pushed markets a little bit higher. So looks like we will see a bit of a relief rally this morning, but the fact is we've made that lower low, so the trend is still bearish below the cloud, and of course price is now starting to come out below the cloud as well. The VIX volatility has dropped back a little, but it's still relatively high at 29. If we're in the 30s, you can say the market is fearful. High 20s is still showing that the market is fearful. FTSE future is up 0.8% this morning, so that's looking a little bit stronger. And the DAX in Germany up just under 2%, so retracing some of the falls that we saw earlier in the week. April is looking set to be a pretty bad month for the market, the second worst on record for the S&P at the moment, second worst April that is. Looking at Japan, we're up 2% there. Markets just recovering in Asia. Hang Seng was up 1.6%, India up 1.5%. So again, we're just seeing a little bit of a relief rally. The Aussie market up 1.3%. We'll look at the energy mix in a minute. Soft commodities are looking stronger. We are just seeing wheat is down very slightly, bucking the trend, but most of all softs are up. There's just a renewed we had a sell everything sort of moment the last couple of days. We're seeing now some recovery in quite a lot of different things. Gold very slightly up at 1886, just struggling again back below this 1900 level, but still bullish above the cloud on the medium short-term charts, and remembering that commodities are generally the last thing to get going in the super cycle. Looking at US 10-year yields, we're sitting at 0.43%, so quite key there that we're seeing that recovery kicking in as well. And the energy mix, well, of course, the really interesting story is what's going on with European gas. Bulgaria and Poland being shut off. That's really pushed TTF and MBP in different directions, and we're seeing this decoupling. This is the spread in US dollars, and this is normalized to therms and US dollars, so we're seeing the same instruments here, so MMBTU, so we're seeing that same measure, and that spread is really increasing between the two. We had previous spikes in the spread, but that was when we were spiking in the price. This is different. We are now decoupling. And it's quite interesting if you look at this on the global stage. We are now $10 difference between UK gas and US gas. These are all normalized in the same position. Asian LNG is now somewhere in between. But UK gas really falling in price. That's good news for energy buyers in UK, of course. But in Europe, we're sitting some $20 difference. So the interesting thing is that the difference between UK gas and US gas is $10. It's twice as much for Europe. So very interesting there, of course. The Russian situation still not helping sentiment on European prices. Looking at the rest of the energy mix, Brent crude, we are waiting for this breakout now. Looks like a triangle breakout, and this is the longer term chart, of course, and we've just got to wait for that break. It's going to happen soon. The longer term trend normally wins. We're moving back to short term bullish here. We were neutral today to clients because we don't have any real clear targets. Same with WTI, of course. Looking at US nat gas, we are down slightly. We said watch the 730 level this morning. That's an area we need to watch. Longer term, of course, this 650 level is quite important. That's where we pulled back to. But we're seeing US gas prices rising as global demand switching from Russian gas to US gas LNG shipments is improving. Coal sitting steady at $222, so that's quite key. Emissions, we were bearish this morning. Looks like we've hit cloud resistance there, and we're now falling away, and we are falling through the cloud. We've got a downside target, so that was what we played for. TTF, we were neutral, very hard to call at the moment with everything that's going on, but MBP, we had a strong conviction of a fall, which is what we went out to clients with this morning. That's in our news service. If you look at the news, you'll see that we cover that in all the trends and targets, and you can just grab this report straight away and see all our calls with the trends and targets there. So looking at German power, looking a bit bearish this morning, but the trend is still very bullish indeed for power prices in Europe. That's it for today. Until tomorrow, happy charting. See you then.